Hello, today we're making a video here on Walgreens, ticker symbol WBA. We're going to be looking over at their free cash flow, which as you can see declined a lot. There's been concerns with Walgreens for several years, so we will need to be conservative, especially as we're going to be closing down stores going into the future. Um, as you can see here, from 2022 just to 2023, that was a 45% decrease. If you come to their revenue, as you can see, it did grow over the last 12 months at 4% and quarter over quarter at 9%. So those are things to look at for Walgreens' annual revenue. So their annual revenue is growing. Their net income, if you come down here, as you can see, it's declined a lot, 119% decline over the last 12 months. So that's never something to see. They are buying back shares. It declined a little bit. Um, Their net assets, that's not something that we're going to be looking at today, but we'll just show you 7% increase at 96 billion. Their total liabilities though is at 68 billion, a 12% increase, and their long-term debt is at 8 billion, a 23% decline year over year. Cash on hand, 70% decline though. They don't have that much cash on hand. If you come to their revenue though and come down here and look at it, as you can see from this quarter to the last quarter, um, as we show up there, that shows the percentage, but you can just get a visual look at it. So these are things, you can look into Walgreens and see if you want to invest in them. I personally don't. I'm taking the conservative route, especially since they've been just losing um, for investors for a long time, over since 2014. They've just been, see, look, 2012, 2014, or is that 2015? $68 all the way down to here now. So, you got to be wary when you look at Walgreens. So, we're going to come over here and do our calculations. We're going to use their last free cash flow, 4% growth rate. We're going to give ourselves a 15% discount rate just because of all the struggles that Walgreens stocks has been having and all of the competitors in the industry, especially when with stuff moving to online and people having access to drugs online now, pharmaceuticals. So we're using a 15% discount rate. Outstanding shares. It comes to a discounted cash flow price of $19.60. We'd probably want to give ourselves a 20% discount rate, which brings our acceptable buy price to somewhere around the $15 range. If we were going to be like normal stocks at 10%, it would bring us to about a 26 buy range, which is very similar to where they're trading at right now. You can go down here. WBA, it's trading at $25.01, so it would be a little bit undervalued, but not enough to make it worth us. So if we wanted to make money, 40% discount rate would put us there, but we're using a 15% discount rate because we want to make at least 15% of our money on a company like this. So right now it's not in a buy range. Uh, if we go to our dividend discount model, they just cut their dividend. So now their dividends at like $1 per year, and the growth rate we're putting it at 1%, 10% discount rate. That brings us to $11.22, and that's just not something that as a dividend investor, that's not something you want to see. That's not encouraging. Because if they were to pay a dollar and already, and their growth rate was at like 5 or 6%, something that a dividend investor wants to see, you could see that it's a more acceptable evaluation where it's at right now. But if we don't even know if they're going to grow that dividend going forward, or we're using a 1% growth rate, it's just not worth our time. Let's just put zero. Let's just say it stays the same, $10. So this is my valuation of WBA. We'll combine the two together here. Let's see what we get. We're going to go with our 1960, 1960 dividend discount model. We said 1% growth rate, 1122, 1122, and we come to a final value of $15.41. We give ourselves a 20% discount rate. We're at $12.33. So it's just something that I'm not wanting to invest in at this time. If you think that I'm wrong, please let me know in the comments, and we can see what you think is going to be game changer for Walgreens, how they're going to hold up in the industry, and how they're going to currently beat their competitors such as CVS, Amazon, Walmart, all these Safeway, all these places that have pharmacies. And you know, better groceries and shampoo and stuff at cheaper other places. So let me know what you think.